Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, January 6th. It's 7:10 as I'm starting the video. And of course, if you're new here, please run the video 1.5x for max efficiency, and I don't think you'll miss a thing. What I want to do this morning is zoom out a little bit. I know a lot of times we get involved as active traders looking at smaller time frames, but so I think it's appropriate at this time to make sure we go out and see the big picture on the daily charts. So what I'm going to do today is look at the daily charts and the 2-hour charts of the indexes, the FATMAAN, and then give you some targets on the ARK complex and a couple of other positions that we've got on, just so you have those levels handy. So taking a quick look at futures, I've got the NASDAQ off 0.4 already this morning in the pre-market. Large caps and small caps are flat. Bitcoin's off 2.4%. That's been getting hit pretty hard lately. Oil continues its run, up 1.17%. Over on the macro front, we've got challenger job cuts this morning, jobless claims, and remember we had a big ADP number yesterday. I think 810,000. So we'll see if that translates into jobless claims here this morning. We've got factory orders. I think we've got some international trade numbers, and then we've got nat gas inventories at 10:30. So let's take a look at SPY. Let's see what kind of technical damage has been done on the charts. So starting with SPY, we had the breakout from the range at 470. We came up, we built what we thought was a nice flag above 475, and that failed yesterday. And we said, if that failed, we're going to come down to 470. It did not hold. So we're just below that level and just below the 20. I think if you're looking at the big picture, we've lost a key level. That's 470. I think that should be a bold line on your chart. And if you will, a go, no-go type situation that odds favor a move down to tag the 50, and then at the same time challenge the low side of our rising channel. Remember, when you're operating on the top half of the channel, and that's why I've got this midpoint drawn in, it tends to act as support. Support, 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 support fail opens the door to a test of the low side of the channel. We broke out, went to the high side of the channel, lost it again, back to the bottom side of the channel, resistance at the midpoint, back to the bottom, breakout, which is now proven to be a fake breakout, back down. I think we go right down here to the bottom of the channel, test that 50, which has been historically a great place to buy because it's been such good support. If you go back in the charts, all back in here, the 50 was great. The 50 was great. We had a little undercut here, but it held. 50 was great. And now we'll have to see how well the 50 does. And then that will be our next big level down here at 463. We'll see a little more clarity on the 2-hour chart. But notice we got a bear cross forming here. We've got RSI diving down to the 50. And so if we get that bear cross confirmed, today, tomorrow, whenever, and then we get RSI dropping below 50, that will put both the RSI in its bearish regime and PPO, while still positive, would have a bearish posture, having put in that that bear cross. So let's look at the 2-hour. Here we got the that bull flag we just mentioned, and then we got the big break of 475. There was a gap in here, as you'll recall. I've taken that off the chart. It filled, and since we dropped in below 470 here, there's just a sliver of a gap here, which I guess you could call it support. It's just so darn small that we may get a bounce here this morning, but I think the key levels are right here. Notice the volume over price profile. We've got a large bar right here at 466, and then we've got a bar right below at 465. So I'm calling that a support band. And then we've got the 50 coming in at 463.5. I would certainly have that level marked or highlighted on your chart, because I think that's, and you'll recall just from the last chart that we had, that more or less, it's not exact, but more or less the bottom side of the daily rising channel. So now let's just think about scenarios. Say there's some selling right out of the gate, right? Mom and pop got home last night. Oh my God, looked at, heard the news. The new year is ushered in. We've got a lot of profits banked on this thing. Let's get out. It might be some early morning selling. Make a run down here towards this band, and then get your kickback rally. So if you're actively trading, I doubt you're using a 2-hour chart, but if you're using, a 30-minute or a 15-minute, whatever, look for some support down here and potentially get a nice kickback rally. And what you can do is, in fact, I'll do it for you. Let me do that. What I was going to say is, what you should do, say we do get some selling. You drop on your fibs and you take it from high to low, wherever you see that support come in, right? Pick any spot, wherever you see the support come in. This looks like a nice spot, 464.5, down at the bottom of this value band. And the reason I say that is you get that scary move, right? Kind of a flush move. And then you bounce back, and that 38% retracement level brings you back to 470, right? That key level. And then that's where you would be looking for that bounce to die, right? Big move down, reflexive bounce, back up to resistance at 470. That's where it dies. That's a very objective place to try a short at that point. And then your other locations are at the 50% retracement level and the 61.8. Now, if let's just talk about the scenario of, what would negate this big red sell bar, or any other bars that would come down. And you might want to take a note of this because it comes in handy when you see bars like this. Reclaim the breakdown candle high. When you reclaim the breakdown candle high, very bullish. Right here you can see that aligns pretty well with this 475. We got the breakdown candle high at 475.50. So if there's some kind of a big rally and everything goes ballistic the other way, you recapture 475. Your final confirmation is a recapture of the breakdown candle high, and then your target will be back at the top of the box at 478.50, 479. So that gives you an idea of how you can, and just remember, I've got this Fibonacci drawn in there, but it's just an approximation. It's wherever the end of the selling happens and you start seeing support and an emerging bounce. Then you drop in your fibs from high to low, and then you can get a gauge on where those potential bounce targets would be. And just for a point of clarity, say they make some wicked move, and bring it way down, and then you get a wick. Right? They buy it up immediately. Maybe it tags the 50 and they buy it up immediately. Your fibs go to the bottom of the tail, not to the body, to the bottom of the tail. So from the very high to the very low, regardless of if there's a wick or not, or a tail, depending on your terminology. Usually wicks are on the top and tails are on the bottom. So wherever that point is, you drop in your fibs at that point, and then you got your retracement levels. Okay. Let's go on to the Qs, where there was a lot of damage. We had a $20 trading range. We broke out. We made a double top high that we pointed out. Now we've lost the uptrend channel, we lost the 50, and now we're making a nosedive down towards the bottom of the $20 range, down at 380, right? And so what I've done here is I've measured this out from the top of the double top to key support, which is 380, and then measured that down and brings us down towards 360 as a rough measured move target. And then notice we've got the 200 right in the same neighborhood at 362.5, 363, right in that area. I think your key level, if you're either looking for a short or you are long, you get a break below 380. That's your big line in the sand, right? 380. You got to be out. You got to be either on the short side or stepping aside, because you've got a confluence of bearish factors going on. RSI below 50, bearish regime. Bear cross confirmed. That's a bearish posture. What I would expect to see, and I'm not talking about today, I'm talking about potential next moves. You'll see this, drop in below below the zero line, and then momentum will be in in its bearish regime. And here you lost the 8-day, you lost the 20-day, you lost the 50-day, you lost the uptrend channel, you had a double top. Those are all bearish factors added together. It is a bearish setup. Now, we're already down 4/10. Maybe this is the beginning of some type of a flush move. I'm just hypothesizing. It's not a prediction. It's just a potential scenario. We come down here at some point, do the same exact thing that I just laid out with your fibs and stuff. You can do that on the daily chart as well as the 2-hour chart, and we'll look at that in a second. But just as an easy reference level, 380. Anything below 380, you either got to be out or you got to be short. One or the other. You can't be long on a break of 380. You can wait for support to come in. If you got to move down to this big value area here at 367.50 and you see support comes in, you can say, okay, I'm gonna try a long against 367.50, and maybe by that time the 200 will have come up to meet it, and then you can say, okay, I'm long against the 200. Great level to try a long. It either holds or it doesn't, but that's a very objective level to try a long, but not here. Not here out in space right after you've broken down. So we'll just have to see how that goes. So I think 380 is the really important level on the daily chart. Now here is the 2-hour chart, and you can see that here's this 380 level that we just pointed out, actually a little below, but we had lows here and lows here. So my expectation is, although there is a large-ish volume over price bar right here, we're already below in the pre-market, and assuming that holds, we don't have some kind of a pre-market rally, we're going to be down in the low 380s to open the session, and then potentially, some follow-up selling, come down here to 380, which is the bottom of the box that we just talked about on the daily. These prior lows, I would expect a bounce there. And if you were looking for a, intraday long type of a deal, that would be a place where I would be looking for that. Or it opens down here and they rally right away. If you recover this 384, you can try along there. But make no mistake, there is a bearish posture to the chart. So it's always important to know, am I trading with the trend or am I trading a counter trend bounce, right? A bear flag like we had right here is a counter trend move. Even though we can see that in retrospect, it wasn't any kind of big trend, but this was a bounce. This was a bounce. We're going to get another bounce. It'll either bounce here, like at the open, or come down, test these lows, and bounce there. I think that's the higher probability trade. I don't like these ones, out in space, out in the middle of nowhere. Those kind of levels are very hard to trust, and I, in general, don't trust them. So if we open in the middle, what I'm going to do is I'm either going to look for a move down to test these lows or look for a breakout back above 384. And I think that's the way to play that. And what you can do, like I just said, you can put your fibs on from high to low, and then you'll get those 38, 50%, and 618 retracement levels. In my experience, the 38% and the halfback, the 50% level, are the most common places to get that reversal, especially if you've got technical resistance coming in at that level. Then you've got a fib bounce, and you've got a technical level of resistance to shoot against, and those are usually nice setups. IWM, fake breakout, bottom of the box, reject at the gap. Now we're back at the 200. Very nice place to, if there's weakness and you get a break of this 200, you can be short and look for 210 at the bottom of the box. That would be a very, logical place to take a look at if there's continued weakness. You're right at the 200. And so we might get a bounce this morning. You get a bounce into resistance back up here is a good try for a short. We're right here at support, large volume over price bar. We're marginally green here this morning in the pre-market. Maybe you get a bounce, and if you got a bounce back up into 222, where you've got technical resistance and you've got the 50-day right above, to me, that's a place that if you got long down here on the reversal, that's where I would be taking it off and considering going short. And if it breaks out, you'll get stopped out, and you can try a long if everything's bullish and everything's going green all over the place for a run back up to 226. But I mean, anything's possible. Just have those scenarios in your mind. And like we always talk about, write it down. Write down on the ones that you plan on trading. Write down what you're going to do when, because in the heat of the battle, you'll forget. So write down your little game plan. If I break below the 200, I'm going to get short. Or if I recapture this level, I'm going to try a long with a target above. And when I get to that target, I'm going to make a game time decision. I'm definitely rolling up my strikes. If I stay long, I'm taking some profit. If I decide to flip, that's the line that I'm going to shoot against. Something like that. So, before we get into Fatman, if you're new here, thank you so much for stopping by. I put a lot of effort into giving the team the levels, trading ideas, objective trading locations. And what I'm trying to do for the team is to give them trust in the levels so they can devote 100% of their effort on execution. That's the one thing I can't do for you. I can't put it on. I can't put the trade on, and I can't take it off. All I can tell you is where price is likely to react, and then you got to take it from there. And then, of course, I'll help you walk through recaps where decisions should and could have been made on the particular levels. So please hit the subscribe button and the alarm bell if that appeals to you. Hit the post notifications so you get notified of all my YouTube content. And then over in the show notes, you'll find a place to a link to the blog site where you can drop in your email, become part of the team, get an invitation to our trading room, join the community, and then morning, noon, or night, whenever I send something out, trade ideas, midday updates, etc., you'll get it right in your email box. That would be fantastic. All right, moving on to FATMAAN. Facebook, sitting right on the 200 at 325. Clear as day, that's your line. Below 325, I would be short. Looking for a retest of this low down at 305. Above, they have a chance to save it. So 325 sticks out. Got this high value area here with the large volume over price bars. That's a good place for the bulls to make a stand if they can't do it. That support drops off, and then you've got a secondary area of value that brings it down to 305 to 300. I've got that as a band of support. So those are the levels there on Facebook. And here on the 60-minute chart, note we've got a unfilled gap that starts around, I'll just call it 321. It's not quite there. And here we are sitting at 324 at these prior lows. You break that this morning, come down to the gap, you may get a little bounce, but then probably this gap will fill and then come on down towards 316. And then you've got a prior low way down here at 300 that has not been tested yet. So 60-minute chart, momentum, bearish regime, RSI, bearish regime in the oversold area. But remember, oversold can stay oversold. That's not a buy signal. You can be aware of it and don't overstay your welcome when you see price coming into a support area and you know you're oversold and you start to see, candles get real small and a level hold. That's a good time to take your short off, cover, and then see what kind of a bear flag reaction bounce you get. And then, like all the other charts, look where resistance would lie. So just as a scenario, say we got early morning selling and we come down and then we start to bounce. This is your first line of overhead resistance at this prior low and at this volume over price bar right at 324. I would expect price to have trouble there. And if it made it up to 327, I would expect a lot of trouble there. Why? Because you had all these reactions, and now all that is resistance, right? Broken support becomes resistance on the way back up. So I would be looking for any bounce to fail in that 324 to 327 area. Apple still right near the highs. Got a little fake breakout. Now price is sitting on the 20, and that's the only reason that I've got this pivot. Just thinking about using the 20 as a pivot level. I think there's some technical support here at 172.50, and then you've got a bigger level here at the 50 EMA right at 166 and a half. So potentially, if this 172.50 area were to break, then I think you're going to be coming down to this 163 at the at the 50 level. Let me see. Hold on a second. I'm going to check something. I'm sorry. It was 166.50. I'm sorry, that's the 50 there. And so that's all the way, down here, and we've got an open gap, and we've got this prior low sitting here at 168. So top of the gap. So we've got some, if it's going to sell, it's got some work to do. I've got a band of support here at 173.50 down to that 172 we were just talking about. And then if that breaks, I would expect a quick move down to 170. And then I would expect the top of this gap to hold on the first tap. But there's a lot of levels of support here. Areas where you can look for a bounce on a move lower into this area. And remember, sitting right here, we're sitting on the 20 on the daily chart. So we'll see how price reacts out of the gate this morning. Tesla, we had a $200 trading range. We came up, got right into the top of that range, and it failed. We had this big gap here, and now we're right at the midpoint of this $200 range between 1,200 and 1,000. We're sitting right in the middle. That's a great pivot point for you to use if you want to be actively kind of trading it. I would expect this gap to fill, bring price down to the 20, and then you can see the 50 lies just below. Then you've got the bottom of the box at 1,000, and then you've got the rising uptrend line coming in for support down around, let's call it 970, something like that. So, top of the box, bottom of the box, top of the box, bottom of the box. That's your kind of your default setup. And then at the bottom of the box and the trend line will be very important levels on Tesla. Let's take a look at the 60-minute. Get that resolution. Here's that support level. Big volume over price bar here at 1075. Bottom of the gap. And then you've got some intermediate support levels at 1040. And really can move this down to 1,000 at the bottom of the box. I think if it got down this far, it's going to go ahead and go down to 1,000 and test the bottom of the box. Really, the only thing that gets me bullish on this chart is recapturing the breakdown candle high, which was right here at the where it entered the gap. That would definitely be a place where, okay, took the hit. Now we broke back above that level. That would be a place to get long on a recapture of that level, or once you find support down at lower prices. It's always subjective to take a long at the bottom of a trading range, but that's not till 1,000. So I think the first test is going to be right here, about 1080, and then at the bottom of the box at 1060. Microsoft got some real trouble here, guys. Why? 3 runs at the high, all of them rejected. You've got the 8-day diving below the 20. You got price below the 50. Nothing good happens below the 50, remember. And now we lost the prior low right here at 321. And now we're diving towards this gap that runs from 315. I Actually, I don't have it drawn in there correctly. It goes to 309. It was right here. It goes to 309. I'll adjust that. So we may get a bounce off of the top of the gap, but if not, I would expect that to fill. If you got a kickback rally into resistance here, that would be an area to try a short. But look where the 200 is, way down here towards 292. Yeah, 292.33. And think about it, you've got a trading range here that runs from 320 to 345. So that's a $25 trading range, and we broke it. So 25 from 320 puts you at 295, right? 25 from 320 is 295, and then that is where the 200 would likely be. So just from a measured move basis, it's saying 295. The problem with that is the breakout was at 305 from back here, and you never want to, you could come in and back test this 305 and have it hold, but on a measured move basis says 295. So a lot of technical damage has been done on Microsoft. Just want to take a quick look. Yeah, this isn't going to be much help till the chart adjusts on the open, but we've got a gap from 315 to 309. So, but you see right here at 319, those were your prior lows. So if you got short, any time yesterday, that's where your stop has to be on a reclaim of 319. We're already, well below that. And I would be looking to cover down around those gaps, depending on where it holds and where you see support come in and start to bounce. That's where I would take it off. Amazon, starting to see some technical damage. Why? Well, number one, fake breakout. Back in a $600 wide range. What do we say? Back in the range, the target's the bottom of the box. When you're up here, you say, oh my God, that seems impossible. But here we are, making our way down. I've drawn in a daily uptrend line off of this low. We broke that. We're below the 8, the 20, and the 50, and the 200 now. We're below that. So from a technical standpoint, everything says bearish. Bearish regime on RSI, bearish regime on momentum, broken trend line, below all the EMAs. I think at a very bare minimum, 3250 is going to be a target. And then you've got prior lows back here at 3175. Those would be my near-term targets for this and potential bounce locations. Let's look at the 60-minute. And you can see we lost the $125 box from 34.40 down to 33.15. That broke. So our next target is 32.50 and then down from there. So, if you had gotten short on that break, your stop should be just above, like at 33.20, something like that. Google, massive damage, massive damage. When was the last time you saw Google lose 4.5% on a day? It's been quite a while. Anyhow, we lost this big volume over price support bar at 2,800. Now we're down at 2,750. I've got that as your pivot. I think we're going to go down and test these lows at 2,700. this volume over price area here. So that's your pivot for today. And then we'll see if this area holds down at 2,700 at this prior low. If it doesn't, you got the 200 coming in at 2620. That would be your next target. And of course, we've got an open gap. I think I'm going to be off the chart here. Let's look. Not really. Showing we filled the gap. And here's that 2,700 level as the next technical target. If that doesn't hold, may get a bounce here. And if you do, you got the prior low as resistance. So keep that in mind. Netflix daily, we talked about it, lost the 200, and now we've got the $90 trading range at 560, and I would expect a bounce here. If you got a bounce back in the 200, I would be selling that. Cascading bear flags, 1, 2, 3, potentially 4. Come down in here, scare everybody, might break below, break back above, revisit the scene of the crime, break of the 200, sell that, and have it come back in. That would be my scenario. Look at this. Bear cross below the zero line. Really, really bearish. You never want to see that if you're a bull. A little weak rally and then it rolls over again. Really, really bearish. Semiconductors. Really important group. We're right here at the pivot point, 302.50. Use that. You've got the 50 below, and then you've got the bottom of the box at 290. That's got to hold. If it doesn't, 50, and then the bottom of the box. But, top of the box, bottom of the box, top of the box. You got to be psychologically oriented to a run towards the bottom of the box if they keep selling tech like this. And then let's look at the 60-minute chart. Here again, I've showed you how I would set up the fibs high to wherever the low ends, and then you'll have your bounce targets set up. I did a measured move off of the double top high. That puts price down here at 299, and you got the 50 on the daily chart right at 298. That makes perfect technical sense of having this breakdown come and tag the 50, find support, and then put in a vicious bounce. And that's one thing also in these bear cycles, you got to be ready for really, really sharp reversals. That's very, very typical of bear market rallies. They sell it off fast, but then they bounce it fast. So have your key levels in your notes and be ready to go, because you want to cover that fast if you're short. So, all right, moving quickly ahead here. Affirmed. If you're short, just stay short against 85 with a stop just above, and then look for this to fill down to 70 as we've talked about. I'm going to run through and show you targets on all the ARK complex. ARK FinTech, looking for 33 right here, 33, 33.50, right in there as a first target, and then we'll see. But one thing I want you to notice on this weekly chart, the volume over price support is almost non-existent. So while I have a line here, right, there's not a lot there. Don't mistake this thick blue line as, oh my God, that's like rock solid. It's never going to break that. I think it is. And I think ultimately come down here towards 25, bounces aside. And that's not like some kind of big prediction, from a fundamental standpoint. I'm just looking at where our buyers going to step in. There's no technical support here. I mean, here you've got a high, right, before it rolled over into COVID, but this was a unidirectional buy every day move. And on the way down, people up here, if they're still long, they know they're wrong. And every day they feel pain, they're going to be sellers. And there's no technical places really to buy on that weekly chart. Here's ARKG. You've got a ledge here at 54 that's coming in there. You might get some support there, but then below that, it really falls away. And I've got the measured move down here to 45. That's what I'm hoping for is a move down here to 45. And actually, I think if you get that, you might even come all the way down here to 35, where there's a lot more trading activity. So that's what I'm looking for. Here's ARKK. Remember, loaded with Tesla. A lot will depend on if that trend line breaks on Tesla. But just from a technical standpoint, measured move target is 75, give or take. And that's what I'm looking for on the ARKK. And we got, either you got short up here against 100, or you got short on a break of 90. So I'm looking for 75. ARKW, you got some support coming in. 97.50, 95. Lines up well with the measured move target. So I'm looking for 97, 95 on the ARK weekly. And I went ahead and pulled the weekly on XBI. We had the break yesterday, looking for 95. And that was a big, big value area. If you got short with me and we get that move to 95, you want to be covering there and congratulating yourself on the win. If you get a break back above this 108, got to take it off, because price should not go back above this resistance level. So let's wrap it up there. Probably a longer video. I hope the extra information is helpful. Stay really flexible in your psychology, in your thinking. Don't get married to, I'm going to buy every dip. Watch the levels. Know where your support is. Know where your game plan is. I think we're entering the golden age of the long-short book, right? Generally bullish resources, generally bullish energy, generally bullish financials, generally bullish industrials, generally bearish Ponzi's and bubble tech, right? And now, you know what they always say? They come after the generals last. I mean, if there was ever a general, it's Microsoft and Google, and those charts look terrible. Amazon, not looking hot. Facebook on the edge. Apple holding up the best, but that's probably the triple final, 4-star general way at the back of the pack. If they come for that guy, watch out. So let's go level to level. Let's not get married to anything. Stay really flexible. Keep your position sizes reasonable and in line with what you normally do. Don't go off the deep end on any one thing in particular, and respect your stops and you won't get hurt. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and I'll talk to you next time.